Hello, Jim here. I've been selling options for quite a while now, making some really good extra income. Today, I want to talk about how I'm able to sell puts in a safe manner on really good companies. I'm going to share with you some of my favorite trades from last month and how they worked out really well for me. So be sure you stay until the end where I'll go over those trades. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. I like to give a market update at the beginning of a lot of my videos. It's been a rough start to September, which really isn't unusual. A lot of times, September can be one of the worst months in the market. I do believe a lot of it has to do with the unemployment. The numbers are higher than what people expected. And I do believe the Fed's still going to do a quarter point cut. I'm not sure they're going to do a half point. I believe a half point cut will probably trigger a potentially kind of a more of a negative impact. I do think they've been doing a fairly good job taking it slow and steady, and hopefully that's what they do instead of doing a half point. I think that a half point cut may kind of trigger the market more so than a quarter point. It may kind of indicate that there's a little bit more concern on the Fed side related to employment. So hopefully a quarter point, hopefully we, don't have any more major dives. I do think we're going to kind of trend sideways and slightly down, probably up until the election. Depending on what happens with the election, I think we may get a bounce after the election. I do think we are going to get some kind of a correction probably within the next 6 months. And then, so we may get a correction and then a pretty nice bull market again. A lot of the companies that I keep track of, when you look at their year over year earnings, things look really good, 4 to 6 months out. It's like the next 2 to 3 months, one to 3 months seems to be a little bit more difficult. So that's my 2 cents. And as usual, it's probably only worth about 2 cents. So I like to always mention in my videos that what's key with trading and investing is finding great companies. So that's top of my, that's the most important thing I like to reiterate. And what do I look for in good companies? Companies that have good return on equity, return on assets. I like return on equity, 30% or higher potentially. Return on assets, if it's in the teens, I think that's really good. Also like to see less debt or lower debt. Depends on the sector. Some companies just have a lot of debt, like a lot of the semiconductor companies have quite a bit of debt. But in their sector, I'd rather them be more on the low end of debt. If a company has no debt, I think that's wonderful. There are a fair number of companies out there that don't have debt, like I believe Zoom doesn't. I also think Williams-Sonoma doesn't. Actually, I know both those companies do not have debt. And to me, if you can run an operation without any debt, is says a lot about the management. So then once you find a really good company, you need to determine, is it a good price? There's a lot of people, YouTubers, influencers that are suggesting certain stocks like Palantir keeps coming up and up and up, or keeps coming back up. I like Palantir. I've actually got some trades on Palantir, but I do think it's very, very pricey currently. Their PE, price to earnings, is over 80. I think it may be as high as 88. That's just too pricey in my mind. I prefer a PE more of 30 to 40. They do have good growth, but I don't think an 80 PE is worth it. It's taking way too much risk. Even NVIDIA with their drop recently, I think they have their PE is half that. I think it's in the 40s. So something to keep in mind. You don't want to spend a lot of money on stocks that potentially are way overpriced, because when we do get a correction, they're going to drop big time. They're going to drop 50%, possibly, or even more. So just keep that in mind. It's you can look at all the criteria. It can be a well-run company, but it may just be too pricey. And I do find that if you put it on your watch list, and that's what I do, I'll put a lot of those kind of companies on my watch list, and there'll be an opportunity where I can trade with them at some point. Like they will go through a rough spell and drop, and then I can potentially sell a put on them and do fairly well. I also don't trade in any companies that don't make money. I do get a lot of requests. What do you think of this company? And if I find that they don't make money, I might look at some of their fundamentals and then I add them to my watch list. And I keep an eye on them until they're making money. I've had a lot of companies that I share with my membership that were not profitable at first, but now are profitable. A lot of the AI companies are that way. Even companies like, Path and Zoom and what is it, Square and some of the others, or Block, I think it goes by Square or Block, were not profitable up until recently. And what I found so amazing was back in 21, those companies shot through the roof when they had no earnings. So I don't feel like you can evaluate a company very well without having earnings. So those are the main things I like to look at. And then next, once I look at the PE, I look at, well, what am I willing to own the company at? A lot of people will look at the Bollinger Bands. They may look at resistance levels and things like that. And I do that also, but I also like to go out 5 years, 10 years and look at a longer horizon and see, well, where is it priced currently? Is it near its 5-year average? And that gives me a better perspective. Is it overvalued, undervalued, fairly valued? And then at that point, I determine, well, maybe it's fairly valued, but I'd still like it to be 10% cheaper. And that's where I figure out, well, this is the strike price I want. It's $100 stock. I'd really like to own it at 85. Then I start looking at the strike and the expiration that will give me a fair amount of premium, and the strike will come in at that level, like the $85. And that tends to work out for me quite well. Now, a lot of people prefer to do weeklies. Some of my members do 0 DTEs. I'll go farther out with the idea that I can close them early. I've closed the ones I talk about today at the end of the video. I've closed all those early, some of them over a month early. So that's what I'm looking at. I start managing them about 21 days out. And if I can close them, I will. I've been cheap about closing. Sometimes I won't close unless I can do it for like $10, $20, possibly $30. I think I'll start, spending a little bit more to close these positions. I closed a lot more last month, and it made the month, work out quite well and set me up nicely for this month. So September started out pretty well for me. And then, I also will look at delta. I'd like to sell puts with what I call a 15 delta. And it's not necessarily an exact 15 delta. Sometimes it'll be like a 20 delta. And it seems to correspond pretty closely with that 10% off, So I found that 10% off going out about 45 to 60 days is right around a 15 to 18 delta. It seems like it's usually, you might not be able to find a 15 delta for a put. You might find a 17 or 18 delta. So a lot of times I will, not necessarily, it'll be a little bit higher than the 15 delta, or the next lower delta might be like a 12. I believe I looked at Home Depot. And again, that's one of the trades I'll talk about at the end of the video that I did. And I think it was a 12 delta was the next one that's available. So I picked like an 18 delta. So, and we'll talk more about that at the end of the video. And then I also like to, at first I did mostly cash secured puts. Now I do mostly vertical put credit spreads. I do feel or believe that downward protection, especially being in September with an election year, and it's a very controversial election year, it's important to have the downside protection. By having the put that you purchased, you can better manage the trade if you need to manage it, meaning you have the choice that you could sell those puts to bring in more income. You could put those shares to someone else. You could do a number of things. I've even had instances where I broke the spread out. I sold the puts and then rolled the short put out farther. And I did that with Dell. I ended up bringing in quite a bit of premium, and I was able to lower the strike price of Dell. Since then, Dell has gone up, so the trade has worked out pretty well. But buying that vertical put credit spread or that long put, a lot of times it just makes sense to do it. Sometimes it's expensive. Other times it can be really cheap. Like you can look at a $10 spread buying that put $10 out from the short, and it can be $5, $10, $15. In my mind, the protection on the downside is well worth it in that instance. So the fact that you can have so many more choices when you're managing the trade, it just makes it worth it to buy that put. And that's typically what I've done lately. I've have a few cash secured puts, but overwhelmingly I have mostly vertical put credit spreads. So those are the main things I wanted to talk about. I primarily, like I said, do vertical put credit spreads. I will on occasion do a cash secured put. But during this time period, if we do have a correction and the market, tanks 10, 15%, and we're starting from a lower level, and maybe we're into a bull market, then I might look at not purchasing the put for protection. But it does give you kind of frame of mind or a safety factor. At least it makes me feel a little bit better that I am protected just in case that, we have a serious downturn. And it's really hard to predict when we will have one. Do I think we're going to have one? I do think over the next couple of months, we will probably have a correction. Will it be a huge correction? I'm expecting something around 10, 15, maybe 20%, which is a natural, healthy thing for the market. Not having corrections and going up and up and up just lends to a much worse correction down the road. So I'd rather have, more often smaller corrections than one gigantic one where we get walloped. So that's what I wanted to talk about. I'm going to jump into a new spreadsheet, which has 3 trades in it that I did last month. I've closed. All went quite well, and they're all on very good quality, safe value companies. You might question, well, is Amazon a value company? I do kind of look at it as a value company this day and age. Now, if you want to learn more about my memberships, details will be in the description. I have 3 levels. They're fairly inexpensive. I'm trying to make this available to everyone. I have a lot of members. The membership's growing nicely. People are helping each other. Some people are true traders where they don't really care about being an investor and owning the companies. They will do things like 0 DTEs and then even Forex and some things like that. And there is a little bit of a discussion about Forex, not much. Then I have other traders who are brand new that are, asking questions, and other members are helping them. So I encourage you to take a look. The middle tier, so I have three tiers in my membership. I have a $10 tier, which gets you into Patreon. You get my collections. You get all the details about my different trades. You also get all my workbooks. You get notifications about my trades. Then I have what's called the Trader Club, which is right around $20. I think it's $19. And that gets you also Discord. So you get this whole big community that is very active. I'm kind of shocked at the number of comments that go back and forth. And some of them are are better traders than myself. I'm still working and I'm doing this part-time. Then at the highest level, I have what's called the Coaching Club. And I've still left this at $25 for a monthly membership. I am going to increase that down the road at some point. But it hasn't been overwhelming. It's one thing I really enjoy. I really enjoy working with people and helping them get started and, answering their questions, sharing my trades, seeing their trades. So if you're interested in that one, the membership is pretty close to being full for the Coaching Club. But if you still want access and it is full, just let me know. I can potentially add in a few more people. So that being said, as always, please hit the like button, set up notifications so you know whenever I do a new video. And with that being said, let's jump into the next part of the video where I'll share with you these, what I call value safe trades. Okay, this is a spreadsheet. I just took my planning worksheet and just made some small modifications and just have these 3 particular trades. Why did I choose these trades? Well, I think they're on names you don't typically hear people making trades on, especially if you like to watch YouTube. These are names that we all know, we all use, Target, Home Depot, Amazon. And I want to share with people that you can also make trades in these kinds of companies and do pretty well. So that's why I'm calling them my safer trades. I believe these are, they're not overpriced currently either. So there's definitely some value in them. So the first one is Target. I originally did this trade starting in July 10th. I did 2 contracts and it's been closed. So this is a completely closed position. And I closed it last month again on August 21st. It was a vertical put credit spread 135, 125, and it was right around a 19 delta. So this was another one of those instances with a delta. To me, it just wasn't worth going down to the next lower delta. I believe it was like a 13, 14 delta, mainly because Target and I believe Home Depot, I think all 3 of these do the same thing. They move in increments of 5. So the next lower spread would have been like a 130, 120, which had a lot less premium. So the original expiration was 9/20/24. So about 60 days, not, 8, 9, about 7, 10. So almost 2 months, like 60, 65 days. At the time, the current price was 143. So it was fairly far out of the money. And I brought in, and I rolled it once already, but with the most recent roll, I brought in a total of 454.40, and that actually includes the sale too. I spent $14.60 to close the position, which the total was 454.40 that of the premium that I was able to bring in from making this trade. The required capital, again, because it was a spread, it was a $10 spread times 2 for 2 contracts minus the 454. So the required capital was 1545, and it was like a 255% return for the amount of time that that I had that trade going. So if you adjusted it for the year, it would almost be like 255. One thing that's important for me is to be able to make enough on each of these trades that if I don't end up owning them, I'm still making a high enough return that it makes it well worth my while. Then I'm doing fairly well. Because again, a lot of times, you miss out on major appreciation if you're selling options. Meaning you don't own Target, but Target goes way up. You might miss the opportunity of picking up that appreciation. So I like to get enough of a return to make it justifiable, meaning Target may go up 8%, but I'm making more than that by trading options on it. So next is Home Depot. If you're like me, I love Home Depot. There's not a week I'm not in Home Depot. There's probably every 2 to 3 days I'm in Home Depot these days. Started this trade in July 1st. It's also completely closed. Vertical put credit spread 305.295. This was, again, a 16.168 delta, so pretty close to the 15. And I believe that was the closest one that I could get to the 15 delta. And at the time, Home Depot was 355. So, Home Depot would have had to drop $50 to put this trade at risk, which is a significant move, even for Home Depot. And then I did not roll this, so it was just the original trade, and I closed it early. All of these, I did close early, so I made 247.60, 1752.40 was the capital required, and it was like a 99% yearly return. Again, on a great company that, in my mind, I currently own some. I would not mind owning more, and I closed it for $14. And I closed it 29 days early. That's why it was 99. I think the original trade was more like 60 some percent on a yearly ROI. So I was able to close it quite a bit early, and that's what I'm finding, and I need to do more of that. Because you definitely do better if you close the position and then open a new one at the right time versus trying to always roll. Next is Amazon. This was the first trade I ever did on Amazon, and I literally opened it early August and closed it late August, so it worked out well. Vertical put credit spread 150, 140, an 18 delta, again, as close as I can get to a 15 delta, where it at least makes sense. I like to earn around 100, a little bit more than 100 per contract, and it was 9/20/24 was the expiration. And at the time it was 167. So again, fairly far outside the money. I picked the price I wanted to own Amazon. I like Amazon around 150, 145, something along those lines. And it doesn't get to that point, but if you wait long enough, it seems every couple of months it gets back to that point. I think it's jumped up. I think it's still right around 167. It might be 176 or something like that currently. So for it, I made 222, 1777. 62 was the required capital. This is like 163% return, primarily because, I opened it in August and closed it early. I closed it 21 days early. So I only had it open for 28 days. So again, if you adjust that on a yearly basis, it turns out to be a really good trade. And I only paid $16.90. The reason I'm laughing at myself of being so cheap with closing these. If I increased, said, well, I'm willing to spend $50 to close any of these positions, I could probably close a significantly, a lot more, significantly more. So the average return for these three trades was 173. Total premium was 924. And I literally spent hardly no time with these trades. I'm usually on the market, make a trade, and get off. I usually do one trade each day. I spend a lot more time filling out the information to share with my membership. So I go and I make these trades, and I literally post it right after I make the trade on both Patreon and Discord, so that if people don't really want to be in Patreon and they're just in Discord, I also post it there so that they can see it. And a lot of members are actually posting their trades too. I got some ideas from some other members about some of their trades, and the average for these three trades, and again, all these occurred in August, was 308.13, which my average is probably closer to 250, but for these three, being some of my more profitable, was 308.13. So just a few notes I wanted to go over. So for Fidelity, what I like to do, and it works well for me, is I use Active Trader Pro. And then each morning I literally just go through by expiration, the ones expiring sooner, and I'll just click and try roll on each of the vertical put credit spreads and see which ones may generate enough premium. If they're, if I see $70, $80, $90 in premium with just clicking the roll button in Active Trader Pro, then a lot of times I will do a limit order, usually more on the high side, and try to roll it if I have that opportunity, and I have 10 or 15 that are potentially expiring September 20th, and I can click on roll for each one of those and look at each one in a matter of like 10 minutes. I'm able to get through it. I know it sounds really high technical, but sometimes keeping things simple is really the best way to go. And again, I like to choose a strike near a 15 delta. And again, it seems to be, at least for the strikes I'm using and the expirations, a 15 delta really feels like a 10% discount to the stock price. I haven't verified that, but it just really seems that way. So I'd like to tell a lot of new members, don't worry so much about the Greeks when you're first getting started. Just think, I want to own this stock, and I want to own it 10% cheaper than its current price, is a good way to kind of begin with. And then also start with one contract if you're going to do multiple contracts. First, learn what you're doing. If you're with a broker that has paper trading, use paper trading. Now, paper trading won't give you a real feel. At some point, move over to real trading. Start with something that, I had a meeting earlier today and I suggested Ford. Do one contract with Ford. That's Ford's around $10, maybe $12. I think it's like $10. So it'd be relatively easy to trade in Ford, and you could do one contract just to get used to making the trade, sell a cash secured put on Ford, go through the process, see the money get deposited in your account, and just get started. Sometimes getting started is the hardest part. And then I like to go out further to pick safer strike prices. Again, if you pick a strike price that's a week out, you're going to be a lot closer to the current stock price for the strike. You go 2 weeks out, you get more of a discount on that stock. You go a month out, even more. You go out 2 months, even more. If you do a leap, you get crazy discounts on the stock. So $100 stock for leap, you might be able to discount it 30% versus the 10%. I don't do I have not done any leaps with puts recently. I did one on IBM a long time ago, and I didn't like how the cash was tied up. So I only primarily do leaps on covered calls, which may be a mistake, but at least that's the way I'm doing it now. And then earn enough to make the trade worth it. I want a nice return, if not assigned at a great price. So again, I want my efforts to be rewarded, but not to such a point that I'm taking huge risks. So there's always a balance. I like to tell people I'd like to at least get $100 per contract on any trade I do, and I'm typically trying to keep it no more than 60 days, and hopefully close 15 to 20, maybe 30 days early. So it's a lot of my trading now does have the feel of like monthly, and that's what works for me. I can make a fair amount of money and not spend a lot of time, again, because I'm working, I'm still consulting, I'm helping my son start his business. So that's what I wanted to share with you guys. Let me know what you think. Do you have any other companies that, like Target and Home Depot and Amazon, that you're trading on that you think are ultra safe and ultra, just great, companies to trade on, that you also like? Or, if you have concerns on anything I shared, also leave a comment. I try to get to them within 48 hours. So thanks, guys. Thanks for taking the time to, watch this video. And please tune in next week, or not next week. I'll probably have another video on Sunday. I typically will release videos on Sundays and Thursdays. Sometimes I'll do it Monday versus Sunday, depending on how the current video is doing. So as always, thanks for joining me, and look forward to seeing you next time.